Welcome to another episode of How to Make Money with Hard Money. We're joined by our friends here, Noel and Yohan, with Cash Out Investments, and they do a couple things that we're gonna dig into the development side, the investment strategy, and then talking hard money as we always do. So good to have you guys on today.
Thank you, man. Thank you for having us. Excited to be here.
Yeah.
To get rolling on.
Awesome. Well, we find ourselves in a challenging market that Caleb and I have been speaking on in prior episodes. Today is in June 2025 for the timestamp. But why don't we start off with you guys just kind of giving the audience a little perspective on who are you guys and what do you guys do on a daily basis?
So, like we mentioned, I'm Noel. We essentially have an investment company. We're general contractors and we're also real estate agents, and heavy investors in this current market. But yeah, that's kind of a little bit about what we do. Yohan there is a real estate agent, essentially the one that acquires all our opportunities, and dabbled a little bit in the wholesaling market and the real estate market and the investing in the building and all sorts of stuff like that. So
Yeah, we pretty much started Cash Out Home Investments around 4 or 5 years ago.
yeah,
After pretty much diving into the industry for the first time. We don't have any family or anything previously that kind of guided us through. We did see common trend in like 2020 that everybody in the world was becoming a real estate agent. So we essentially jumped into that. I essentially jumped into that. Noel was already doing construction. He already had his general contractor's license. I was like, hey, we gotta if I'm making some money doing, just agent work, I could just imagine if we go into it as an investment,
Yeah.
That's when we put our heads together. We raised a little bit of money there through our family to kind of fund our business, like to start off.
Yeah.
And, but other than that, 5 years in and now we're pretty much just full-time builders.
Awesome. So yin and yang, and it's much like Caleb and I. And I guess like I'm obviously been in there around 10 years now, but Caleb's the only one here that's rocked through '08 but
Oh, gee, yeah, that's what they say. Yeah, no, so navigating '08 was definitely challenging, but the market, there's a lot of similarities here. I mean, not as extreme because like I always say, and I've said it several times, fraud was very big back in '08, and it's not so much as of here, but the market is challenging right now.
that's part of the reason we wanted to have you guys on, because you guys are finding success in a challenging market, and we've been saying, if you can win in this market, you can win in any market. I mean, like you said, it's not '08, but I think it's one of the closest things to it, closer to probably 13. I think it's probably even a little harder than 12, 13. We've been talking to a couple like mortgage brokers who share that opinion. I think we were listening to we were with a friend that was kind of saying like 70-80% of the conventional mortgage brokers have left the industry over the last like 12 months. So I think like, not to like create a bunch of fear mongering or anything like that, but it's a challenging market. So today, kind of understanding like what you guys are doing to be successful today.
No, essentially that was the idea as well too. So when we got into new builds, we were like, we rather get into a new build and run our risk in the new build than a fix and flip, right? Because in fix and flip, if you go based on the 70-30% rule and then minus your repairs and minus that, you're buying a property at, let's say 50%. It's very hard in Tampa to buy a property at 50%.
Oh yeah.
So even if the market, goes down 10%, that's pretty much all your profits on a fix and flip.
Right.
And a new build, we all know that's not the situation. You got to take that hit. You could take maybe a 15, even 20% hit and still be okay, make some money. Worst case scenario, refinance the deal, make sure your partners, hard money lenders, everything's taken care of. And you just follow the bullets for the next, couple years or whatever, rent it out. And
You mentioned you guys, like, were you guys doing any wholesaling in the beginning?
we wasn't. We spent around 1.5 years, maybe 2 years as well when we're doing some fix and flip as well. Doing wholesaling, honestly, I would say we weren't the best in the wholesaling industry. We tried everything. We did courses that were even up to 25 grand just so we could crack the code.
Yeah.
And I'm gonna be honest even with the audience, like wholesaling is not as easy as they portray it out there. It's not just you could start with no money. No, don't believe none of that.
Yeah, it takes money. Yeah.
For experience, we could tell you that you need money, especially here in Tampa, Florida. We were told we needed around 80 grand a month to really see that, 150, 200.
At least to be consistent. Yeah.
yeah. And just to kind of like clarify that, there's a difference. We look at it now after doing it for 1.5 years, trying to turn it into a scalable business, because we the way we kind of started, like Joan said, we were both doing construction and doing real estate. We decided to partner up and try to acquire properties and stuff like that. And then with a small family loan that we got. I think it was like 20 grand that we got originally.
Yeah.
Just to get us started with systems, with maybe doing a little bit of text blasting at the current time and stuff like that.
Mhm.
We were able to acquire properties. We did our first flip. It was a success. And then after that, we kind of deviated from going back into doing flips for some reason, who knows why, right? Because if something worked, keep going at it. But that next year and a half, we kind of got stuck on making sure that wholesaling was the actual avenue that was just generating quick capital and was generating like the opportunities and keeping the ones that you wanted.
Mhm.
And it was definitely not the case. Like, we believe wholesaling now is a skill set and not so much a business.
Right.
That it felt like it was easy for, let's just say, so you don't have any money and you're driving around and you find a property. Like, yeah, you're giving your time instead of your money to go and find one property, and yeah, maybe it can work 1, 2, 3 times. For you to turn it into a business where you're acquiring property every month, there's a lot of marketing spent. There's a lot of like operation, right? There's systems, there's trainings, there's so many different things that went into it, that for that full year and a half, it was like we kind of like steered course into that area.
Mhm.
And after paying for education, after trying, after spending countless amounts of money on a monthly basis in marketing spend,
Mhm.
we'd spend like, almost $20,000 a month for 3-month periods and not really have deals under contract, but not get them closed.
Yeah.
So,
And
like,
there's like a ramp up period.
yeah, there's that time period where you're like, okay, you're continuing to spend money out, but nothing's really coming in.
Yeah.
And here and there, you get one, and we'd get like a $50,000 wholesale deal, which you sound like, oh, that sounds great. But we just spent 60 grand over the last 3 months, and
Right.
been trying to
Yeah.
enter our market, so it's not
Right.
gonna work.
I was if it was like an anxious time because I was also like during the time we had one competitor bad luck, but then we had buddies and other companies that were doing great,
Yeah.
and they were wholesaling and they only had one marketing strategy, which was texting, and then all these texting regulations and stuff. But at the end of the day, that's what me and Noel said. We're like, okay, we want to build this capital for what, right? What is the goal here to build a capital?
Yeah.
To get into fix it, to get into new construction. You know what? Let's just get into that right now.
So what approach, like when you're in this position, you're new to the market, meaning like you didn't have family in real estate. So you guys you're creating the industry for you and your family, and you're in wholesaling, you're realizing this doesn't work. So then you want to venture off into, I'm assuming, building and development. How does that transition happen? What are you thinking about? Like, what tools do you need? What skills do you start to prepare yourself to understand to be able to be successful?
Right. So essentially, I would say there's a misconception in real estate that you do need a lot of money to get into it. But I think that like liquidity is just
Yeah.
straight out of your own pocket. And I think that's a complete negative like narrative in the sense because you really don't need that much money when you do have connections with hard money lenders, private money lenders, even if you incorporate creative financing in there. So we educated ourselves to get to that point where we're like, okay, we don't have that much capital at the moment.
Right.
How to structure.
Yeah.
We structure a deal and how can we put the pieces together and be pretty much the mind behind all it. You know what I mean? So then get into the deals. And that's exactly what we did.
So you focused on funding first.
We focused on funding first.
I know you had your GC license at the time. Were you doing projects for others as well? Were you doing spec builds or?
Yeah, I mean, when I first started off and got my license, it started ramping. Like, the craziest part, man, is that I became a general contractor. My first job was like a $1,200 like drywall repair,
Mhm.
right? And for that same client, like I grew all the way up to like a $500,000 renovation inside, right? So it's something that like you grow little by little and just doing things, and it's more so what people are wanting to do. And just as a builder, I'd say as long as you answer the phone, man, there's a ton of work out there.
Were you building any new construction homes or started all renovations?
It all started in renovations. I got my first new construction home, and the guy had hired a previous builder that got him to the foundation level. And then after that, they had some, discrepancies. They didn't want to move forward. So then I took that house on after and basically finished everything on the inside, in a timely manner. And not only that, when you're a young builder starting off, like you do get taken advantage from a lot of these developers, right? You get to a certain point where realistically, when you go and run it, like you don't make the money that you deserve for running it. You're running all the errands. You're the one that you're the workhorse, the what you call the mule, for the project and stuff like that. But we looked at it as like, we understand like the real estate market. I was helping investors make money by building them. They were willing to pay me as a contractor, so there was money there,
Mhm.
right? And then same way with the whole real estate. Like when we were helping people acquire properties
Mhm.
that they would then go fix and then help them sell it, and they were still paying it. And we're like, okay, so we're helping them find the project, if we're helping them build the project, if we're helping them sell the project, why aren't we doing the project, right? And so we kind of stumble upon like,
And it's the missing link of the money.
yeah, we kind of stumble across the point that when we were first doing text blasting, we landed a few deals, tried to wholesale them because we didn't think that we could take them on. We speak to a lot of like, people that'll say that they do, there's a lot of misconception between hard money, private money, bank money. Everybody just says that they could secure your loan until you actually, until you actually go through the steps with them, and then you realize that all the hurdles that they put in front of us.
And differences.
So for us, like that first deal that we mentioned to you guys, it was a great success, but at the time it didn't feel like it. At the time, it was a property that was $750,000. It was valued at 1.1, but the seller had a balloon payment that was due the month prior. So he needed to get out of it. He needed to get out of the house, and so we agreed on that number, and we spent 2 months trying to wholesale this thing to any of our investors, our mentors, just anybody in general. We were trying to reach out, see who wanted to pick up this deal. And in that market, it was a bit tougher. Nobody wanted it. It was too high. Nobody wanted to get into a luxury flip. This house was 5,400 heated square feet, right?
Yeah.
So in Tampa, in Carrollwood area. So nobody wanted it. And it's crazy how life happens that way, that the seller was so in need of it to sell. And we were so desperate trying to figure out how to get it done, and whether it was bringing it to another investor or got to a certain point where I would say that we were naive, but we were like, okay, so what does it look like? We met some hard money lenders, and it's crazy how they structured the deal, because now that you look back at it, I mean, it was like butchered. It was just butchered. Like they lent, I think it was $400,000
Okay.
on a 750 purchase price
Okay.
for a house that was worth 1.1, right? 1.1. So essentially, when we told the seller, hey, all we're able to secure is the 400, he's like, anything under 750, I just prefer to lose it. I just prefer to lose the house, right?
Okay.
Because he knew it was worth like a lot more money, and so on.
Just to make sense for him.
And so we kind of started getting like very creative, where we were just talking about scenarios. What does that look like? And so we're like, hey, so if if we are able to give you these 400 now, would you be willing to hold the remaining 350?
Did you do that in like a seller financing or like a joint venture? Like
It
got
was a
on the
seller
profit?
finance.
Seller
Yeah.
finance.
Okay.
So
So he took a second behind the hard
he
money
took a
lender.
second behind that. And the craziest part is that people won't believe this, but that being our first deal, not even really knowing what creative finance was, we were able to negotiate that seller carryback at a 0% interest with no payments.
Wow.
So it was like, you're going to get these 350 once the house is built and fixed and sold.
Yeah.
Right. And then
They must have believed in the project.
yeah.
And you guys to a degree.
He had some desperation into him, but then at the same time, he also felt like some sort of conviction to buy into it. After 2 months of constantly talking to this guy,
Yeah.
and figuring out how we were going to put solutions and explaining to him like how it's worked. Yeah.
Well,
And
0% interest. You had a JV partner at a financing price. That's a beautiful thing. That's a great deal.
and the story it gets a lot better there after that. But essentially, we were like, okay, now let's just say that this works. He takes the seller carry at 0% and holds all that. We need money to rehab this place, because this is 5,400 heated. It was like 6,000 something total size. It's a big house, and it was super dated. We had to really put some money into it.
100 grand plus.
Yeah. And we're talking about like a green pool that there's no coming back from. And we're talking about like, a lot of things that you're like, okay, this house needs work. A lot of trees in the front that had just lifted up the driveway completely.
Oh.
So like, you're talking about the driveway was like almost 5,000 square foot of driveway.
Wow.
So how did you finance the renovation?
Craziest part is that once we start talking deeper, okay, his balloon payment's 150 that he owes, basically 2 months before we had already met him, that balloon payment was due.
Got it.
So, and you would say, okay, why doesn't this guy refinance? Doesn't anything? Well, the thing is that prior to that, when he bought the house, he didn't know that his ex-girlfriend at the time had gotten a secondary $200,000 loan on the property, not paid it, and so it had damaged their credit and everything. So he couldn't.
Yeah, he was stuck.
He couldn't. And retired baseball player too, so it's not like he had a job that had like income or anything that he could work it out. So we're like, okay, we need this money for construction. Before we reach out to him, we tried going and trying to raise it privately, but we were trying to look for about $150,000, into the renovation. That's what we thought we would need at the time. And nobody was really able to give it to us. So we told them, hey, you got to pay a balloon of 150. We're giving you 400 now.
Yeah.
How about you keep, 50 grand, pay the closing costs, lend us the 150, and we'll actually pay that at a 10% interest, over the time. We felt like we were being fair at that point. We were giving them 10% interest back. So he decides to move forward with that. So he lends us the $150,000 to do the construction right after the closing. So
ARV 1-1. What did you end up selling this thing for?
man, it's a crazy number because after that, we didn't expect the deal to take as long as it did. But we then at that point, after the day of closing, like he's telling us like the family's moving out and everything like that. And the day after closing, we swing by the property and there's a no trespassing sign. His ex-girlfriend had moved into the property and said was not leaving because he said that it was
Oh my God.
and it was absolutely wild.
Count that defaulted note, huh?
No.
A 200,000 she put in her pocket before that,
Yeah,
right?
yeah.
It's more.
Yeah, and they were never married. He bought the house. Like it was a situation where like, okay, I'm nobody to say if you whether to give her money or not.
Yeah.
Do tomorrow. From what I see, I don't think you should, but he didn't feel like he should at that moment either. Long story short, we have to go through an eviction process with them that takes another 2 to 3 months, maybe even longer.
Yeah. So driving up your cost, your holding cost.
Man, crazy. At that point, we own it, so we're paying the electricity. And for those of you guys that don't know, like you can shut off electrical, you can shut off water on a property, but then you're paying for those 3 months that they were living in there. If they didn't pay for it, we're due for it because we're essentially the owners.
Yeah.
So we were paying the electrical, the water, the mortgage, on a house that we couldn't even step foot in, at that point. And so after going through the proper steps, like we definitely tried.
In California.
Yeah.
Would it take
Yeah.
a lot longer?
And Florida changes laws now, so now it should be a lot easier. But
Yeah.
at the time, it wasn't like that. We even tried offering her.
3 months is not awful considering, but yeah, you could probably get it done in 30 days now or less.
Yeah, I mean, never thought we'd have to go to an eviction.
Yeah.
Welcome to the exciting, sexy part of real estate, right?
All right, give me the number. What was the ARV number? What'd you sell for?
We ended up selling that property for 165.
165.
165.
So it ended up being a real nice deal.
Yeah, real nice.
So like essentially when cash out. Yeah, really started. That gave it the injection it needed. It is the unicorn that we say that they had onto us for the first deal after maybe 6 months of opening the the company and stuff like that. That came to our play. We were like, oh, this is story. We cast out a year later on that, and after that, that's when we started allocating our funds to what we have today and stuff like that.
When I hear the stories too, it's like it's similar to our story. Just the willingness. We talk about like growth mindset here a lot, and the willingness to learn, try things, get in the game. Like I can even relate to the wholesale side. Like our partner Mike Jones on the development side, he runs Elite Cash Buyers, and we still operate the wholesale side, but we decided not to be one of those spending that type of money. And so it was a conscious decision after doing a similar trial process that you guys went through, but we focus instead on the disposition side, which lines up nicely with the lending company because we have a lot of borrowers who are looking for investment strategies. So instead of working on acquisitions, we were instead focusing on finding dispositions, which
That's why he's saying it's a skill set the whole time because nowadays we just JV with other people and we have the investors. We have, as an agent, I have a lot of people that I know as well that they're holding properties and this and that. So it's just a lot easier to, this is all those. Yeah. Rather than spending all this money.
Oh, it's a smart
there's
shift.
The actual, off market.
I think you wouldn't have known too unless you tried it. You'd always be wondering out there, like what does it look like? And I mean, even from if you guys been in the game like 5 years, like you guys went through similar cycles as us. With DKC Lending is 5 years old now. I mean, I know him and I have been doing it with other companies prior to that, but we're evolving with the market too. Like we were doing 20, 30 fix and flips a year, and then fix and flips dried up, and now we're doing more new construction, which is very similar to your guys' path on that way. And sometimes like the market will tell you where you got to go. So.
But it's crazy how life does it. Like we technically, like we said, we wanted to get into it just so that we could build some capital to then invest ourselves because we're our own general contractor, our own real estate agent. We do all this stuff. And so that's where we said we kind of lost sight of like what our path was at the current time, because that first deal we tried wholesaling it didn't work. So we ended up doing it and like, doing a deal with basically no money out of our own pocket,
Yeah.
but a whole lot of risk. A year later, vandalizing, fixing and everything like that. And then the craziest part is, like I said, it wasn't like a switch that flipped in our brains. So let's keep doing this.
Okay.
It was then we switched for the whole another year and a half just to focus on wholesaling, using that capital to acquire properties, to get properties under contract and try to sell them. And that's where we said, like we tried to, rather than keeping it as a skill set, we tried turning it into a business that was going to be the fuel, and that's where it didn't go well for us, and now that we look at it, it's more so like, since it is a skill set, we know how to acquire properties, how to negotiate them, where to find them, what do they look like, what does a distressed seller look like, all these different scenarios. And now it's more so like, if we get opportunity presented that doesn't work for us, that we know we could go sell to somebody else, like you said, we'll JV,
Yeah.
we'll dispo it out, we'll do it, but it's a skill set. It's not the main business.
Right.
The main business.
Well, tools in the tool belt, the optionality, being able to, like you guys both have, like those, just the 2 licenses alone will allow you to do a lot of different things depending on what opportunities present themselves. And it's much like us on the lending side, development side. We scaled the lending side, raising a lot of capital through like the vertical integration of, we're not just brokers, we're actual lenders. What does that mean? Well, we're real estate investors. Like we'll lend capital out, but if something happens and you have to default a property and take it back, what are you going to do with it? You got to be able to fix it up, be able to dispo it. If the market, I was always reading about '08, and I had Caleb in my ear on like going through it. It's like, well, what if you can't sell the property after you take it back because the market's collapsed? Well, we got a property management company. We'll hold it, and the investors can collect rent checks instead of interest payments. And it was like that vertical integration of businesses. It's kind of like whatever the market throws at us. If flips are hot, we'll flip. If lending's hot, we'll lend. If we can build, we'll build. If you can't do anything with it, you could dispo it. That optionality just allows you to be malleable in these markets.
Always having an exit strategy. We have having different exit strategies when we look at every single day.
Yeah, I love that.
That's what's our safety net. That's what we could rely on to sleep all at night, or else you go crazy.
You guys like acquired quite a few, because I know like I know good about a bit about your REO schedule. I mean, you guys acquired some really, like, you guys acquired a lot of properties in a short period of time, like lots. And like, how did you guys go about selecting? Because some of them you've been sitting on for a little bit too.
Essentially, just as soon as the switch, turned, we got an opportunity based off our own like outreach to others that we did get off market a lot. We wanted to wholesale it. We had people telling us just wholesale it, and we got offers for wholesale. We probably could have made 30, 40 grand on that one lot of wholesale. We were like, no, this is our time now to
Take action.
let's really take action and get this new build going up. So we were able to do it, raise the money through privately, and
So who gave us that money?
they had the same guy that essentially sold us the original house.
Oh, yeah.
After we cashed him out, he was happy and stuff like that. He essentially lended us the money for the lot originally.
That's good karma.
And there you go. And
Relationships play.
where we come from, like our family and stuff, it's not like we had access to capital. When we say we got like an original loan to start, it was like,
It wasn't a Donald Trump type
No,
loan.
it
Wasn't a couple milli.
It was 20 grand. It was 20 grand to kind of get the flow going, on the text blasting, on the systems, on trying to keep the organization, CRM. People don't tell you like how you got to administer data. You gotta like, it's crazy, man. The wholesaling industry is like a factory and an operation that, after paying like tons of courses and going like, you guys are probably familiar with Tiffany and Josh High up there in Ohio. They have great success with what they do. But then after you go into their course, you realize they're 70% flicks and flip themselves, and only that 30% wholesaling. They just use their marketing spend for the acquisition side of there. And, they have a dominated market out in Ohio, which is not the same as here in Florida, right? So
Yeah, low price points.
when
Super low price.
they're spending, let's just say, I don't know what they're spending now, but at the time it was maybe 80 grand a month on marketing. In Ohio, they were the top of the market. Here, you need 80 grand to play in Tampa, because there's guys spending 200, 300 grand on a
Especially
month.
Hillsborough, Pinellas County.
Yeah,
Very
it's
sought
crazy.
after.
Yeah.
Throughout this conversation so far that we're having, I hear nothing about banking. So you guys are doing this all privately, through relationships, through private lenders, and you're growing your business. It's safe to say that everyone understands private financing is more expensive than banks. We all know that rates are a little bit higher, but the flexibility is a lot different.
Yeah.
right? And so, and it's more of a relationship thing for, especially at DKC, it's a lot about the relationship.
Yeah.
But, at no point did you say anything about banking. So you're doing this all privately. How are you choosing, who to work with? Is it just what's presented to you? Are you actively trying to grow with other people, or what is the strategy like?
Well, essentially, it's something that me and Noel talk about, and that's why we admire you guys as DKC so much, because you guys actually make the deal happen, right? You guys underwrite the actual deal rather than underwriting the actual person. Your experience and who's your mom and who's your dad, pretty much. So you guys actually look at the deal, underwrite it, and make it happen. That's why our David Silent deal is like one of our biggest deals right now, which is the one we're mostly scared of, to be honest, because a week later that we bought the deal, David Silent fully flooded.
Guys, we bought a triplex that was making, $6,000 a month. That at least in the meantime, it could hold off. And wanted to do it. And a week later, this thing's like, we had to give everybody back their deposits. All the tenants to get them moved out, and the house is fully flooded. And now it's just been like, oh, okay,
And then even, well, I'll talk about that deal and how we funded that, so the audience to know we definitely funded that, obviously, through you guys. And you guys never bat an eye as to, let me see your history. Let me see where you guys focus on the view. You saw the vision that we're portraying. Obviously, David Silent's home market and stuff like that is prominent, and there's a lot of good comparables in it. So you guys saw that right away, and we're like, okay, let's see how we can structure it. And we structured it. Honestly, it was almost creatively as well.
Yeah.
Because it's not like we came out of pocket, with all that. We put the properties up as them as collateral.
The new non-Dutch product around it.
Yeah.
Non-Dutch product, which is obviously, one of the safest things for us, because as builders, you do have a lot of costs throughout the whole time. And on a project like that, that's, millions of dollars to actually build. Imagine total cost of that alone, So not
Possible. Yeah.
very helpful in that. And we definitely appreciate that. And we've, like Noel said, earlier, we've contacted a lot of hard money lenders, and we try to give them a shot, and try to do this. And they're all about, okay, like, let me see your credit. And then let me see who's this. Let me see who's that. Nothing about the deal.
Right.
Even though we talk about it, hey, listen, this is what it is.
Yep.
Like we've had properties, man, that we have paid off lots, full entitlements, out of our own pockets, we probably have another 50, 60 grand in the actual deal.
Yeah.
And they'll still won't even give us 50% of the cost or anything like that. So it's like, what are we doing here?
Yeah.
Well, one of the things I could direct to Dave is a little bit, because when we were in that position, we were doing things a little bit for the first time. Like you spoke about the non-Dutch product. When you were looking at it, because we were helping to structure the financing, get as creative as possible. What were you thinking about when we were creating the non-Dutch, and why it was so valuable for them?
Well, I know like it would literally kill the deal. Like you said, it's like not feasible for the deal itself. Like it's just too expensive. I mean, like anything over like $1 million, I think really we're trying to set that marker like $1.5 million, $2 million, $1 million. Like anything over there, non-Dutch, it's just like murders deals. And then especially when you throw in like it's a development project.
Yeah.
I mean, it's different if it's $1.5 million and you're 90% done with the project and you're just like COing it and you can do it quickly. Yeah. It's a different beast than like if you got to go through plan development. I mean, you guys are doing PD on that deal.
Well, no, we didn't have to go through PD, but we definitely had to go through platting. It was zoned properly, but definitely a lot of changes. Like, we would have thought that we would have kicked off the project a lot sooner than we did, but we ran into a lot of and we ran into a lot of situations where we were trying to ask for exemptions and didn't want to go through the time of going through all that.
I mean, City of Tampa right now, I don't have to tell you guys, but it's like the permitting process is.
And the David Silent committee is the one that.
Oh my God.
They're very vocal. They're very vocal.
I see people like.
If you're on the committee, guys, I want to meet with you guys.
Let's be friends.
They're not watching How to Make Money with Hard Money. No, I mean like the permitting process, like seriously, like a permit, which is part of one of our questions for you guys, like the permitting process. You see guys that are like, oh, I'm going to permit in 3 to 4 months on their performa, and it's just like it's not going to happen. Especially, I mean, the beach is a different beast.
The system's broken, man. It could be a lot easier. The system's just broken. Like for example, in Hillsborough County that we're running to a lot, there's 3 people in the right-of-way department, right? They have 700 permits that get applied for every single month. Besides the ones that have already been open and taking corrections and stuff like that, it's a beast, And then the thing is that there's not that innate nature of like trying to help people out. So you really got to win them over. You really got to try to talk to them. You really got to try to build a relationship with them, and it gets easier the more and more stuff you do with them. But it's a broken system. Like it's not
No incentive for them to expedite either. I mean, and no offense to them, but they're clocking in 9 to 5, and they got
huge plate, you know what I mean, like with 700 a month.
You'll have a conversation with one of them, and they'll just tell you it's just that they don't have the proper support, right?
Overwhelmed.
They're trying to do all these separate channels and departments so that there's no override of like, who handles what or what is, but it's that the system's broken in the sense that there's no continuality,
Mhm.
there's no movement throughout the process, and so that does hurt.
Get lost. That's just right away.
That's just the route.
We were doing so we're building 4 houses right next to each other, same plan, same footprint, everything,
Mm.
and
Oh,
always
get me started.
in every department, at least one of them got lost because they thought that they had already gotten to it, so they're identical homes.
Right.
So it was a lot of following up, we follow up on a daily basis.
Yeah, you
These guys are great. Like, they know.
That's part of our job.
We're on top of it because the keys, yeah, it happened. Like accidents do happen, and something could get lost. So that essentially is what's holding up a lot of the things here in Tampa and the developments, all the approvals. And when you get into something like David Solomon, there's a lot to go through with it.
Mhm.
Engineering, plating is a whole beast up. We're in year 2 now, and you guys have that experience too with your townhouse. It's something that we never thought it would be so complicated and so timely. So essentially, there's a lot going on.
You throw a hurricane in the mix or something like that, like that doesn't help speed things up.
You got plotting, structural, you need geotechnical, your stormwater retention. There's just so many different steps that go through that it is a beast of its own. But like you mentioned on those 4 that we submitted, they were the same exact plan, side by side, same exact size lots, submitted at the same time.
Oh.
How were they reviewed differently and different people reviewed it?
I don't know.
And the
Like maybe
3-4 weeks later, I know, to get the last one. The same exact plan, and then not only that, just to tell you that the system's broken, we had different corrections on each one depending on who reviewed it.
But same plan, same everything.
But it's the same exact plan. So where's the system? Where's the process? Like if this plan gets approved here, it should be the same exact thing all the way throughout.
Yeah. Like that. How are they not speaking to each other? I mean, they're speaking to each other. I mean, in Safety Harbor right now, we got a couple builds going on there, and like we got stuck with it right away because the city of Pinellas County said that it was a Safety Harbor's job. Safety Harbor said it was Pinellas's job, and we went back and forth like that Spider-Man meme, where they're like that. It was like that for literally 4 or 5 weeks, and then they're like, "Oh, my bad. It's us," and yeah. And so like we got it all the way through Safety Harbor, and they're like, "Wait, it's not us." Like it just burns time, and you're like, "Can you guys just pick up the phone? Here, let me merge you guys into a call."
Pinellas was even more impact.
Oh man, yeah, Pinellas, City of St. Pete's, all those areas.
I mean, some of the small beach municipals, like if you go down to Treasure Island or something, I mean, there's 1 or 2 people at Indian Rocks Beach in the entire building department.
Yeah, I got renovations there that is still in the pre-review, pre-screen phase, and it's 90 days plus they've been in there. And there's nobody that you can follow up with, like whatsoever. When there's nobody assigned, you don't know who's the contact that you got to reach out to, and you call the county, and they're like, "Oh yeah, they have time to review still the area." They're just slammed. You call and say, "Oh, we got 1,000 plus people." Okay.
I'm hopeful that the storm maybe helps some of the beach municipals a little bit, because I do see, we got a demo permit in Indian Rocks Beach in like 5 days the other day. So like that will happen because I think they're a little bit motivated to start, allowing people to go. And I think the motivation is certainly the storm helped with that. I mean, it's still super early. I mean, it's 8 months post storm or so. And most people didn't do much in the first six months plus because they're still waiting to figure out the insurance claim situation and
the
things
system
like
wasn't
that.
built for it either. The way that you had to go through all the steps that time, imagine all those people flooding all those applications at one time, to the point where they had to start opening stuff up and saying, hey, like roofing inspections are going to be done virtually now, right?
Yeah.
Because it's just too many, and everybody needed a roof replaced around.
Have you guys played with any of the private inspection providers or plan reviewers or anything like that? Yeah, what's your experience with that? What
You need that. You need that, man, because the thing is, like, there's a set of inspectors, in the county, and then you would call them in. Like I've had experiences before that you'd call in framing inspection, and the guy pulled up to the front, saw that there was trash outside, and just put a violation for trash and not check your inspection.
Mhm.
Right. So like, and then not only that, you won't find out till the end of the day, in the afternoon or whatever.
hit
it
you
is.
with the reinspection fee too?
Yeah, and then constantly, exactly. So it's more so it's a system that's not they're not working to help you get through your project. So when you do involve a private provider, you are, hoping that they're a lot more communicative, like, and they help you move throughout the process. You definitely want to make sure you're building something that's up to code, up to standards. You're doing it right. You want
And they're liable, so they're definitely on the hook for that. That's why they're not like letting you cut corners.
yeah, they're not letting you cut corners, but they understand that time is of the essence, right? And that's one of the things that when you're doing your real estate course, like that's immediate.
Yeah.
Time is of the essence because that's what kills deals. And we talked about that non-Dutch product. Like if you have this kind of scenario where you're going up to a county and limiting you to do stuff, like think about it this way. From that property that we mentioned that we acquired off of wholesaling, and that was our lot that we were going to first start building. That happened in March, and from March till today, where that was maybe 16 months now, something like that, we've acquired 15 separate lots, to build on
Awesome.
and opportunities. So it was a ramp up period. But the craziest part is that there's an area there in Citrus Park that was unincorporated. So it seems that when, Hillsborough County wanted them to develop and bring sewer and city water, nobody wanted to be a part of it.
Yeah.
Now you ask them, and they'll say not in 100 years they plan on putting sewer there. You got to pay for it as the developer.
Oh.
So you have to go through variances to get septic tank and regular systems. It's crazy how it takes us 9 to 10 months to get the permit for something that takes 2 to 3 months to build. Right. And that's a killer, and
Yeah.
and that's essentially happened to all our 6 properties that we bought like in that same area, thinking that, yeah, this is our market.
But you guys did it like smart, especially on the Davis Island one, because you guys like pledged cash flowing assets to kind of like be able to handle. Like it's really smart way to be able to get through the permitting process on that. Obviously that kind of speaks to like your story about like accumulating properties, and because if you just went right there, you wouldn't have had that opportunity to do that. So I think everything happens for a reason that goes in the right order. I mean, on those types of property, can you just avoid it and go like well and septic, or like they
No, you need to go like you need to go well and septic because it's just not feasible for you to bring
yeah.
in city
So then
water or
everybody
sewer.
just does that.
Right? So you have to do it, but then now the systems have changed to where you need this big ample piece of property to have a well and a septic,
Sure.
right? Because they need to have certain setbacks around it, and it just gets pretty crazy. And then not only that, they only have a certain amount of gallons per day you're allowed to do. So, for example, we have properties that because they had city water, it still needed a septic. We could have gone away without having to do a variance, but we were capped at maybe 3-bedroom homes.
Yeah.
Right.
Yeah.
And then the market difference, that area was calling for 4-bedroom homes. So just because we had to go to 4-bedroom homes, it's a 9-month variance. So
Yeah.
it's a system that's not meant to really help you, and they want developers to bring in sewer and city water, but it's not like their infrastructure isn't set up in place to work, right? That it requires lift stations.
Like the tax dollars should incentivize them to expedite that process. It's like you want a bigger house here, you want to tax me more, then like help me get through it and be developer friendly.
And that was a piece of land with the tax basis of like $26,000 costs, right? So like you're been maybe getting a couple $100.
Yeah.
Now when we build a property, we have $20,000 in impact fees because it's like $9 a foot now. We apart from $20,000 in impact fees, and you're asking what is that money for, right?
Yeah.
That's just for the impact fees. Then you got to pay if you do have city water. You pay for the city water taps. You pay for the electrical taps. You pay for everything in general. And then not only that, after you sell it, the property taxes are high. Like, how would you not want to help develop this area? Bring more light into this area.
And speed is probably the number one thing they could do to kind of incentivize somebody like yourself to go in there and like take on more deals.
Yeah.
Just allow me to get through it.
And want to work with you, right? Like, we're not asking you to bring in sewer. Okay, if we have to bring in sewer, incentivize this one way or another.
I mean, how much for the audience? Like, how much is it? Because I mean, obviously it depends on where the closest tap is too, right? I mean, if you're doing a half a mile, some of them could be what, a half a mile runs. I mean, how much does something like that cost?
That one, we're only like 700 feet away, right, from those 4 properties. But the problem was that those 4 properties, you would either have to do an HOA to have one lift station for all of them, which at that point, then it's a subdivision review. Then it requires a whole lot more. Or it would be having a lift station at each one of them and still run it through the city all the way over there. And then the crazy part is you're having to fund it yourself for the city to then maintain. So their requirements of how they want you to do it is super extensive, right? Like, yeah, the highest quality material, highest quality of the processes, this and that.
What does something like that cost to run 700 yards in or 700 feet?
I mean, at the time when we had based it, if we had to put 4 separate lift stations in that, it was over 100 grand.
I was gonna say at least 75, right? Yeah.
Yeah, you know, and then we went through septic tanks that even with variants and all, they were like 18 grand a piece. So you do that over 4, you know, let's say 80 grand. But it just didn't make sense because then now you have HOA
Yeah. Yeah.
and a lot more extra reviews and stuff like that. So it's definitely some.
So you love the city, is what you're saying?
Yeah, I would love, you know, we kind of have now stayed away from or have proper expectations, I would say. We've stayed away from trying to go to these undeveloped pieces of land.
Writing work. Yeah.
But now we set the expectation. Now we know a certain size lot, a certain size build in certain areas and what to expect as far as time.
Well, if you want to join the board of commissioners, then I'll vote for you.
Yeah, I mean, we've sent emails to the commissioner and we've never gotten an answer. So anything that we could do to get some kind of communication there, you know?
You know, on the lending side, it's been challenging for us too, because it's, you know, on the development side, you reach your challenges, but on the lending side as well, because when you have these hurricanes and, you know, certain areas are impacted by all new challenges, as I said before, it's like on the lending side, when you have a new market, where the prices are today. You know, because before the prices that were yesterday are not today, right? The place has to be developed. You get, you know, 380 demo permits in the Madeira Beach area. Now, all of a sudden, there's all these opportunities where people are going to sell a top dollar because there's so many opportunities. They're going to sell cheaper. So now, as a lender, where do you fit in? And then you have, you know, conventional banks who see a area that's been impacted and they pull funding. So now the exits where all these people are trying to exit, developers are trying to sell. What happens then? You know, so how are you, you know, how are you guys reassessing that? And because now I would assume that it re-extends projects longer.
Or are you just staying away from those types of?
Well, that's that's something that we after this hurricane, like no flood zone area, like absolutely no flood zone area, and we won't acquire. We'll do one for a client, obviously, and we'll maybe partner up with somebody that will provide us an opportunity in like a flood zone area like that. But we wouldn't, but you know,
We'll do a new build in a flood zone area like Davis Island.
even that happens.
But
Well, there's time we were already into it, but even like let's say right now at like Treasure Island or something like that, we won't really consider a new build unless it's an opportunity we can't say.
yeah,
There's so much, like right now, there's not really too much inventory. Why? Because everybody's demoing and they're going to start going.
and so all you're gonna have is new builds in the area.
You have 50 new builds. Say like
One thing that because we have like that joint venture model, and one thing that we closed on an Indian Rocks Beach lot, like 2 blocks off of the no, not on the water. It's on First Ave in Indian Rocks, and the reason that we did that was because it was a short-term rental. It was one of those needle in the haystacks. It was an oversized lot with short-term rental capabilities, and that one of our partners on it is very, very experienced in that area on managing short-term rentals and owns other properties in the area. So it's a new construction. Yeah, we're going to build a duplex there.
Yeah.
So, I mean, building a new construction duplex in an area with short-term rentals kind of de-risk the deal for us to be able to like get in, dial in our construction costs on the beach, and you know, and so so that was like, if we were going to enter the market, what would it look like? Probably like something that could de-risk it with a partner, by the way, that's, you know, very experienced in managing those in those areas, knows his numbers, and the rentals there right now are thriving because there's not enough inventory.
Yeah,
you know?
and you got to think about it. All those people whose houses did get flooded that do live here, they need some place to stay in the meantime, whether they're building a house, they're fixing theirs, whatever it is. So that rental market is definitely going to boom throughout that area, especially when it's like short-term rental. It is furnished. It is something that the people can just go in and kind of stabilize for a few months. And
People still love the beach, you know, but I mean, it's like very, very selective in that manner. There's a lot of borrowers of ours who are on the beach right now for sale on beautiful new product and really struggling to sell
yeah,
right now, you know, because
there was areas there that like literally right before the storm, those pieces of land alone were $800,000, $900,000, even creeping up to close to $1 million. Now you can pick them up for 600, right? So you already see it because everybody has to do that. We won't pick up any flip that is in a flood zone because you know that to get the end buyer there, insurance is going to be a smack into your deal, right? So a new build does bring it up to code, but then again, now like we were mentioning, the basis of where we're buying our land is a lot less than it was literally 8 months ago, 9 months ago.
yeah, and still, what does it sell for is an interesting question that nobody really knows.
Yeah, and then everybody
12, 18 months from now.
everybody's offering you know, lower prices on the land, but if you know that's all that's going to be coming up in the same, that's what we were talking about earlier, like Cape Coral and those areas there. If you're only competing with new construction, then you got to realize you got to really buy this thing deep because you have a lot of competition very comparable to you.
Right.
And you can be very unique and do nice finishes and do everything. But at the end of the day, they got endless amounts of option compared to like what we have in Citrus Park, where, we have what is it now, 6 or 8 in that area. And there's maybe on the market 15 new constructions, in that whole area. So
Wow.
so you're competing.
You're half the market.
Yeah. And then realistically you have comparable, there's not a flip that you're buying now there fixed up for, let's say, an end buyer under that $500,000 market, and we're starting our new constructions at 550. Like, why would you even look at that other house, right? So
Fix and flip's been dead for a while. but
Yeah,
I
no,
didn't go into that.
that's the great reasoning.
we keep like, we try to, there's different markets for different things. We've done a few deals with you guys now, right? But like the ones that we just recently did in Sly, like that's a different market, right? We're providing in the central of Tampa, we're providing land, so properties from 0.30 of an acre to 0.88 of an acre. um for entry level pricing compared that you're going to get to, it's cheaper than what you're going to get in Odessa, it's cheaper than what you're going to get in South Tampa, and you're centrally located in Carewood. And then no new builds in around this area are giving you the space. So it's definitely choosing our markets well. So Citrus Park, we know that our entry level new constructions competes with any flip.
Yep.
We know that this area there in Sly, we're providing land that you're competing with somebody that would have to go all the way out to Odessa or very, very far out on the outskirts. You're not going to get into central Tampa. And then Davis Island, a tried and true market. What does it need? It's missing townhouses, right? That's the one thing out there, that any townhouses that have been posted have been sold pre-construction and nothing's available on market, maybe 2 to 3 sales after.
I
So
love it.
Especially with pools. I know that's
Yeah.
putting pools. There's nothing.
yeah, they almost took it away from us. That the Davis Island committee almost took it away from us, but we're figuring out a way.
I mean, like, and every development project has its risk too, and we talked about that a lot on the slide deals, where there's like when you're especially when you're paving the way, but like it's very calculated risk in that manner when you're comparing. I don't want to say apples to oranges, but you're comparing new homes to older homes, but still, that's like you have to be able to have those takeaways where you're like, if a older home is selling for 500 and I want my new home to sell for 550, it's like it's a reasonable risk to take, and there's a significant upside too, because there's a chance that you hit it out of the park on those Sly Ave ones, because it's you are setting the market a little bit in that area for that type of product.
When you have something unique that like the market needs, but nobody has been able to achieve it before. Nobody has tried it, right? So you just don't have anything that's a direct comp to you way far out to different metro markets, right?
To the bottom.
But when we analyzed the deal and we broke it down after various meetings, we've seen that like our basis point is like it's a no brainer, and it can have a good tremendous upside because there hasn't been anything there. But that basis point still makes sense. That like bare minimum still makes sense.
Price, man, I think that was a true deal. I mean, think about it, 2.5 acres pretty much,
Yeah.
in central Tampa. We bought for 500 grand. I don't know if we mentioned it to you guys, but the day after we closed, the actual listing agent was like, "Hey, by the way, there's this one guy that was praying for your downfall, for you to not go through this deal, but he is willing to offer 600. Would you like to flip the land?" That's in one day alone. Offer
Yeah.
or more.
Yeah. I remember making that closing date was important.
Yeah.
Reason you had to.
Yeah, that seller was like, yeah, and they're gonna get more money. So we had to make that happen.
Any way out on that deal.
We turned that offer down because we bought that deep enough that we could, in that situation, we could go different avenues. We want to do a little bit more premium product, but if maybe we don't do, so much of a premium product,
Still makes sense.
Talking about, it still makes sense.
Yeah, absolutely. Yeah, you got optionality. I think like insurance is another interesting, and like just to say at the beach, not to go on a tangent on the beach, but like we've seen real difficulty procuring wind insurance on brand new product or fully renovated product, because they want to see builders risk to have wind, which you're under construction, but when you're done with when you've CO'd the home, now you need a vacant policy, but they won't allow wind with vacancy policy in a lot of zip codes. A lot of and that's kind of like pretty new for us, and a lot of these insurance underwriters have pulled out of these markets right now.
And that's what's affecting the conventional financing on the back end, which is hurting the market.
And we're dealing with it on our current portfolio of loans we've already closed on, just trying to like figure out how to navigate that on vacant, because it's that mix between builder's risk, vacant, and then tenant occupied, having the right, because then they'll be like, okay, well, we'll give it to you if you have a tenant in place. If you have a tenant, we'll give you the wind. But if you don't have a tenant and you get that place, an insurance claim happens, they're not gonna pay out. So it almost doesn't make sense. And then throw in like banks that are underwriting these deals, like they just want to check that box, and check the box and say, yeah, you got the tenant policy, it's got wind check. They don't even care that, like, the fact that if there was actually a claim, they wouldn't pay out. They're just trying to check the damn box, which is just like non-logical lending to me, and it just drives me nuts.
Yeah.
I think that's one of our favorite things about like working with you guys and cultivating a long term relationship. Like we said before, we've had a lot of our hard money lenders approach us and again promise the world, but then it's all the hoops that you got to jump through, right? They by the time you're doing like credit apps, paying for appraisals, application fees, like you're consuming money just to try to see at the end for somebody to tell you whether it works or whether it doesn't, right?
Right.
And so we've always been the kind of people that like we said, we didn't really start off with a lot of capital. We didn't start off with a lot of money there for you just to say, okay, yeah, they got the backing. Because if we would have had our own money at that point, you only use it for a little bit of leverage, right? To use
Sure.
banks. But when you're starting off, you want people to buy into the vision. So with that first deal, like we mentioned, we did it through creative, we did it through hard money, and we did it through private money. So it was like a combination of the three.
Yeah.
And that's kind of like where we've landed with you guys. Like when we presented Davis Island deal, it was a deal that we didn't have, tremendous funds to be able to secure and do. And it was out of our realm. But the fact is that when we presented it over to you guys, we realized like you guys are, similar mindset as us. You're looking at the actual deal itself. Like this is a no brainer, right? Like
Mhm.
the deal makes sense. It pencils, it makes money, it has contingencies wrapped into it. It has situations that still, secure everybody, secure you as the lender, secure
Yeah.
us as the investor, secure the builder, like everything in general. And then we're able to weigh out and see what needs to be done to get the deal done, right?
Yeah.
Most people aren't like that. It's all like one sided. Like you want the deal to be 60 or 70%
Yeah.
of loan to value. You want the deal to then have the like a certain amount of money there. Some people
And
want to
then
do
want you to
does
have a ton of
they,
liquidity.
like all these different things that it's like, man, you want me to present you a
Yeah.
golden nugget,
Yeah.
a golden nugget. And then some deals are capable of it and some aren't. And we love the fact that you guys were able to like, all right, we sit down, we got this project, we want to do it. You guys believe in the product that we're trying to put out there. You guys believe in the market that we're in that specific area. And then being able to say, okay, if we need to fund this deal and we need extra money ahead of time to fund, some of the soft costs and stuff like that, what do we need? Okay, well, we didn't have a lot of money, but we were able to structure that deal in a very creative way
Yeah.
by pledging properties that had paid off rentals.
Mhm.
And even if there weren't our paid off rentals, it was a combination of our partner, our joint venture partner that had paid off rentals, didn't have the capital for it.
Mhm.
Like the amount of money this guy will make on that property is never made in his life in one situation.
Yeah.
And it was all from properties purchased a long time ago that just been rentals and it's just sitting capital, sitting liquidity there in a property that's not getting put to use.
Yeah.
And so it's crazy how like when like-minded people get together, it's like any deal has a solution. It's just how do we structure it? If we would have given up originally knowing that they only gave us 400, those first lenders, they only gave us 400 on a property worth 1.1. You realize they were really trying to get us into a situation where, you couldn't feasibly do it. But it was that having that innate ability of trying to make it work one way or another
Yeah.
that we were able to talk to the seller to do this, that we were able to get it done, and we were able to make it, a successful deal.
Yeah.
And that's always been our method, even on the exit strategies. We're not like you said, we have 7 different ways, and it's not always just refinance and rents. It's not always just sell. It's not always sell at a lower amount. It's that we're able to implement a lot of these strategies. Okay, so I'll give you a perspective. We can do a lease to own option,
Yeah.
right? So we can do a lease to own option. We can sell it creatively,
Yeah.
right? We can structure a lot of things differently that help us get exit strategies. And a lot of people like we talk about it all the time. Like real estate is definitely a big portion of ours, like as agents and stuff like that. But we see a lot of agents on the market that just don't even know these things exist.
Yeah.
They
Right.
don't understand it.
Yeah.
They don't get their objective is to sell a property. However it gets done is to sell the property, right?
Right.
And people don't like that, And like for example, there was a lot of lenders that didn't like to have anybody take a second position mortgage, and
Mm.
you ask them, okay, why?
Mhm.
If you realize if this person, the second position mortgage has to default, the first one has to get paid regardless.
Yeah.
So if you're in the first position, like, oh, why are you essentially concerned on that? And it's people always trying to like look into your pockets.
Mhm.
You know, we've had that scenario where a lot of lenders are just trying to look into your pockets and not focused on how we're structuring a deal, that making sure that they're secured, they're getting paid,
Yeah.
and everything is there, and to still get the deal done. And because nothing here is black and white. It's not like credit's black and white doesn't paint a true story. You know.
I think it's so important. You touched on it.
Yeah.
Yeah, you touched on so many different points. But as a lender, what David and I have seen, what I've seen specifically is, the relationship we build, it's a give and a take, right? We don't look at it all one way. It's not all on the lender side because we're in this boat together. If you fail, we fail. We're,
Yeah,
res-
it's
we're
absolutely a
responsible.
partnership. Yeah,
Right, it's
it
a
might
true
not be
partnership.
legal partnership, but it is like that's how we look at
Yeah,
it.
because if the deal goes bad, our investors are looking at us and we have to perform and your success matters to us. So like when you go into these deals, like I remember the Davis Island very clearly, you guys didn't want all the money we gave you. We actually gave you more than you requested. But then when we went to the slide deal, we had some concerns that we addressed with you guys on a relationship standpoint. And then you guys said, oh, you want it? We'll meet you halfway. We'll put a little more down. And we had this discussion. And it goes back into what you're saying, the tools in the tool belt. You have to understand what lender does what for you. We're never going to say we can do it all for you because that's not what we provide.
Sourcing of the capital matters a lot. Why certain people look. I mean, just even understanding where the source of capital comes from sometimes. Is why it'll tell you why they're asking for certain things. And
I feel like for us that's created a lot of ease, because when you're first starting off, you don't know why you're getting all these hurdles put in front of you, right?
Mhm.
Then you really start to understand that it trace the money. How does it work? Like we talk about the Dutch and non-Dutch, right?
Right.
So on a small deal, it makes sense for you guys to do Dutch because it really doesn't really make sense for you guys to do non-Dutch. You know,
Right.
if we're gonna be honest, we know what the points and fees are ahead of time. But if we do non-Dutch and we build the property, let's say we get the loan after we have the plans already approved. So those 9 months are already gone.
Right.
Right. Now in the next 2 to 3 months, that's how long it takes us to build. It's the 3 months just to get all those draws. So realistically, you guys don't make money on the carrying of the capital. But what people don't see is like, okay, they don't make too much money, but you got to have that money sitting aside to make sure it's available for us. So we get that part and we understand that we didn't originally. Now it's more so that it's understood. And then the same way you guys understand a Dutch loan on something so big and so massive like that, it wouldn't make sense, right?
yeah, the give and to take, as Caleb said. Yeah, I mean, and that's like credit and selling loans on the secondary and like versus private capital, because like blended rates is like you're saying, if you need $1 million, but you need 200K right now, but you need the other 800 to be in a bank account ready to go in 24 hours.
When you need it,
You call it.
'Cause I can't wait 30 weeks for you guys to give me a draw. Like, when you need it.
Non-interest bearing accounts, like the investor who's funding that would be better off funding a CD or something at 5% on the blended rate. So,
That's
but
sometimes I understand, to be honest. Like, I feel like, oh, they're so predatory and this and that, but then put it in perspective.
Yeah.
Like,
yeah, we had to source some different capital to be able to do it too. And
You start having your own money that you invest in deals, and you realize it's the same way. You know what I mean? Like, why would you put it there if it's not going to functionally work? Because you could make 12%, but if you're not taking out all your draws or whatever it is, it just won't work. So you start getting that understanding, and the beautiful part is where we've had a lot of lenders, like I said, that will promise the world originally, and then you go through all the hoops, and then you also realize that majority of the time they're not on the same page as you, like on the deal itself.
No.
They're all only worried about their underwriting and how they can get their deals like structured and stuff like that. And the beautiful part is that the relationship we've created is that we could talk these deals throughout. Your numbers, we know our numbers. We can agree, we can debate, certain things, point our perspective, point your perspective, and see where we could be in the middle. And then at the same time is making sure that you guys have a deal that's worth funding and that want to be a part of, and us having a deal that still makes sense, involving what the capital that needs to be. And we've never been the like, we've always hated that thought process of looking at other people's pockets, right?
Right.
Like, I don't, if like on wholesaling, it's a thing, right?
yeah,
It's a thing. If you buy this deal at a number that I give you and it makes sense for you, when you find out that I'm making 50, 60, 80 grand in the back and you don't want to do the deal, that you're looking at other people's pockets. Yeah. So why?
human nature to a degree, I can't say that I've never been bought a property and been like, you bastard though, you're gonna make more money than me on the flip than But I get it. No, 100%.
So it's crazy because like you might think as a wholesaler, you'll never you'll never buy a wholesale deal that you're getting.
Oh yeah, no,
Right,
absolutely.
so we buy this property.
on the market
By the way, on the market, it was our cheapest lot to this day was 75 grand. Right,
in the same area of the
the
forest.
same area.
Really? Okay.
Yeah.
We buy it on market. It was a great deal. We're like, oh, for a lot there, oh, we'll take that any day.
Okay.
Turns out they double closed on us. They had the lot for 25 grand.
We paid a 50,000.
$50,000 wholesale fee on that, and it still makes sense for us, though, you know.
Yeah, yeah. But you can't lie. It hits you. There's a little sting there. Yeah. But when you talk about like the spending of the market, like that's what I always go back to. Whenever I have that emotional, I'm like, I'm like, he spent 80 grand in marketing to get the damn deal, though. You know what I mean? So it's like you don't see their cost.
When you go back and you realize the amount of money spent, the amount of money made, amount of contracts made, you really see that number starts to equate. People think that it's just easy money. Your cost of contract, when you actually run your numbers, it could be high. You know, good people, they run like $5, $6, maybe $8,000 a contract. There's situations where you're maybe 25 grand deep before that contract hits.
Sometimes like they're so long. I mean, I've seen deals where they've been negotiating for 3 years, and you see that money, and they're splitting it with 4 people, 3 deals, and they spend 30 grand a month in marketing for 2 years, and you're like. But to your point, don't count other people's money because you don't know what it's.
When you're a wholesaler, you also put stuff on the contract. You're not essentially going straight to the title company to get property cleared and stuff like until you secure a buyer, right? You don't want to incur the title company costs when the deal isn't solidified. And so it's happened where you think you got a banger of a deal, and then when you go run it, there's so many liens, there's so many mortgages, there's people entitled to the property previously that you have no idea who they are, right? There's so many different things that go into it, but we talked about that not going into people's pockets and not necessarily focused on the amount of money that they're going to make. You know, when you look at originally when we first started, we're like, Ben, like you said, we thought lenders for the most part were on a predatory scale, but we realized everybody's got to make money in a certain way. And we were focused on they're making all this money ahead of the time. But the key to it is we wouldn't be able to make any money at all in the deal if we didn't involve a lender to get the deal done, because that's always been our perspective. That's why we're so comfortable with doing a combination of different lendings, whether it is hard money, private, creative, bank, and even on the private lenders, like we're able to offer certain amounts of returns and percentages of the profits and stuff like that, because the thing is that we're able to do this deal with our knowledge, our experience, and our sweat equity, and being able to help somebody that has funds that has absolutely no idea how to make
or no opportunity. We talk about on the equity side always. It's always a tricky conversation when you're comparing, all of the work and time and energy and effort that you put into the deal versus somebody who just put cash up and what their return is and from an equity position. And we have those. I mean, there's industry standards to follow certainly, but you're like, well, they're making all that money and all they did was put their money up. I did all of this work and everything, but it's comparing apples to oranges. You couldn't have done it with, and so it's difficult conversations, but understanding where everybody's coming from, what they say, like you got to walk a mile in their shoes type of thing. So don't judge everybody else. I think it's a solid point to take away from
They
it.
want to ask you guys too before. Well, go ahead. Let's finish this topic out.
Oh, no.
No, you're good. Yeah, you're finishing up here.
Started it. What was the process like raising this money and being, credible enough for these investors to go ahead and lend you? You mentioned that you have some capital that you guys are moving.
Yeah.
You guys have some capital.
Well, I mean, it was like in the beginning, and you could speak from the originating side because he was out there being like, "Yeah, I can fund your deal," and not necessarily 100% knowing if we had the cash to fund the deal. But I think
These guys.
I came really real about it, but I think the first
The
thing.
reality was making it happen was like kind of what proved the concept on the borrower side, because like even when he'd say that, we always made it happen. We never didn't miss the closing, which was like the reputation built up. But from like the capital raise side was like you have to have a good deal to raise.
You have to know your deal. You have to know that you can get it done, right? Even if you don't have it, you have to know you can get it done, and that you gotta do something. You like even as a builder, like think about it this way. My first project, like I mentioned, was like a drywall repair for $1,200. Like we had experience, man. My dad before in nursing homes, like I say we because I carry his experience with me. But 25 years prior, man, he was working on over 300 plus nursing homes all throughout the eastern side of the country. Like construction experience is ran in my blood for a long time. And even when you don't know how to do something, I had clients that were reaching certain levels of like big projects that I didn't have the experience for it. I didn't have the context for it. Let's just say that, right? I didn't have everything figured out, but I never said no to it because this is the one opportunity I have to go figure it out.
Yeah.
You won't know something until you actually do it.
Right.
You know, and so a lot of people, we find people that go into analysis paralysis, fear of taking forward, fear of taking steps forward. If they haven't done something, they don't want to sign up for it because they're scared to fail. And that's not the proper mindset, because you got to try something first to know if you're even going to fail or not. You haven't pushed your threshold to know if you're capable of it or not.
For sure.
And, you know, when you believe in your confidence of, you know, like we talk about this all the time, what keeps us easy and being able to sleep at night, even though sometimes it gets rough, is
Sleep one eye open.
yeah, no, sometimes it gets rough because it's just, you know, there's the mainstream media, there's the news, there's this, there's that, and it's all different perspectives, and nobody knows what is happening for real. So like you can't buy into it, and you can't control the uncontrollable. So why stress them? So one of the things that keeps us easy is that we take calculated risk on the deal, make sure it pencils and makes money. But our real confidence is in ourselves, no matter whatever the situation is.
Figure it out.
However, whatever's unknown that we can't even think of what's going to happen, happens. How are we going to approach it? And how are we going to deal with it? And we set ourselves in scenarios where, you know, like we said, we have an appetite for deals that have a certain amount. Like most of our deals, it needs to have at least, to start off, a six-figure spread.
Yeah.
If it's smaller than that, then you're running way too close to not making money or losing money. And so why are you doing it? Are you doing it out of desperation? There's deals out there, man. Like when you buy, the key is buying right. Buying the land, you know.
When you, especially when you have the right deal, you can, and you believe in yourself that you can find the right outcome.
And the key is that we have margin there in case something were to happen. And then not only that, knowing that us being young and trying to start here and create this over a long period of time. And I see myself getting 40, 50 and probably still doing the same thing, because it's just my tool built, my skill set, my nature now.
Yeah.
It's what I eat, sleep, and breathe.
I always say, as long as I'm breathing, as long as I'm breathing and healthy, you know, I'll figure this out.
Yeah, I mean, you're always going to have opportunity, and it's the skill set that allows you to see the opportunity, take advantage of the opportunity, and execute.
Maybe you can shift from the operator to the investor too, is like a natural like growth, you know. So I think like from having the deal and having the belief, I think to add to it is like also you got to have the right business model. You know, like we created a, like, as much as I want to say Caleb and I did a great job, you know, I think it's like we had a good product. So like we had a product that we built and designed the product to work for the borrower, but also the investor. So, and then we built the right policies and procedures around it to, you know, protect the investor's capital in a worst case scenario, and then also provide a product to the borrower that
Is worth taking.
To make big money, man, you got to solve big problems, you know. So the thought process is you can calculate as much, you know, margin as you can into a deal, but then at the end of the day, it's like what we said, having multiple exit strategies, having confidence in yourself to do it. And then one of our main beliefs is that we're so young, we're starting off, and we're creating a name, a reputation, a relationship with a lot of different people, that the one thing is me and him prefer to lose money out of anywhere than to make sure that our name gets tarnished or ruined. So we always make sure that our investors get paid. And some people aren't like that. Like, and I take that approach because, like, in my world of contracting, it's very, very similar.
Real estate in general, Bay Area, it's a small world.
You know?
It's a small world. That stuff will follow you.
You realize this all the time. Like, there's so many builders that leave projects halfway through because when they realize it's not working out, it's not making any money, it's just like, let's leave. And so the name is tarnished, right? But builders have, you don't have to market to have work, right? You just got to answer the phone. That's what I tell everybody, right?
Yeah.
And the key to it is that I've had projects. Like, I'll give you an example. In Sunshine Skyway, there's a building right there, right before you get onto the Skyway Bridge. The first unit that I did there, man, I took a loss, like a massive loss. Like, I didn't run my numbers properly. This whole thing was wire mesh and stucco. If you had to do any alteration as far as electrical plumbing, you were reframing the whole building, like the whole unit. You know, so it was a ridiculous amount of money that I lost. Like, the first one, I think I charged maybe $65,000 for that renovation. And just to give you a perspective, everyone after that was 100, 120 to show you how bad the first one I lost in.
Yeah.
If I would have quit and left, I would have never gotten the other 11 units that I did after that.
Yeah.
Right. And that's the perspective most people do, leave and they quit and that they're done with. And that's where you lose opportunity. You tarnish your name. You don't, you know, show. And it's okay to be open with your clients. This isn't working out for me. we agreed on a number. You're not going to pay me. Sometimes they're willing to help you, but a lot of people aren't. They're all focused on their money and the amount of money invested. Okay, I'm gonna finish it, but guess what? That other project that you mentioned to me, I can't do it anymore. I said no to it until this is the amount that I need to do it for.
But those are
Take that or leave it. But I finished the first one, right?
the values that you have inside, and those are the values that you have in your product.
That's how we're gonna be here long term, man.
Yes, David and I, when we have our guys in our organization, or men or female, but we have our core values as a company. We're transparent, we're reliable, and we're client centric, and we live it. We're not about to just talk it and say, oh, this is what we provide and this is what it is. But we start at that point and then start working our way down. And that's when we're talking about the structure of the company and how we wanted to do it. Is we understand we wanted a corporate structure for DKC. So when people come to us, it's very organized. And Dave did a great job setting those things up. But at the same time, we never wanted to lose touch with the borrowers. We never wanted people to feel like we're so out of touch, that we're so corporate. Don't call us with your situation. We want a relationship.
And the tricky part too is that we have like 2 clients in every transaction who have like contrasting, outcomes. I wouldn't say contrasting outcomes, but like, the investor wants to give the lower amount of they want the lower amount of money, and then the borrower wants the highest amount of money almost in every transaction. The borrower wants more and the investor wants less, so like they're conflicting in that manner. And so like trying to find the right outcome, but always doing it with the, like what's best for the clients is like, we'll always miss a deal if it's not in the best interest of our borrowers and our investors. And we're ready to walk away from any deal for that same reason as you. And no commission is worth losing our integrity. So
No, you can't. And we think about it as well. Something were to happen. Just to say that elephant in the room of who knows what could happen, but something were to happen. One thing that we've learned over time is just communication, transparency, and showing that if something were to happen massively throughout the market and everything, everybody's getting affected the same way. It's all about what are you doing? There's some people that are going to cave in and quit and leave, and leave everybody hooked on the line, and that's where the ugly side of the business goes.
Yep.
And then there's the people that, like us in our scenario, we would come to you and say, hey, look, this is what's going on, this is what's happening. How do we solve this? How do we make sure maybe it's not originally what was thought because nobody anticipated this to happen, but definitely finding a solution to get out of it, because it's only periods of times where,
and like we said, it's a partnership like that. You'd be shocked at how many people, go silent when something's going wrong, and how many people and then now it's like, then you know what has to happen next. If you're not communicating, we're going to file foreclosure. We have to protect our interests. But if you communicate, you say what's going on, maybe there's a solution. I mean, this week alone on distressed loans, the borrowers were evading us. And then when they finally contacted us, we were like, we were trying to help you. We have a solution option for them. We're like, oh, that's actually a good option. I didn't know. I was trying to figure it out and then bring you the answer. And it was like, if we come together, yeah, we can come up with the answer together. And like 2 of those 3 distressed loans, like we have good outcomes that we think we can avoid.
That's what happens when the market's mainly people that are predatory, like in the hard money industry. When it comes like guys like you guys that are so flexible and stuff, you're completely different than these other guys, but you're pretty much put in the same bucket. Yeah, right. People don't have that trust until you break the ice, and you're gonna tell you everything. Yeah.
and then I'm telling you, I think people just shoot themselves in the foot. Like those builders were leaving. Like, yeah, man, you lost money on that first one, but you got 11 more that you made it all back. Because integrity, and because even if it's not integrity, it's like you were open to finding a solution for the problem. Say, like we've watched videos of like previous builders that in '08 had a ton of situations like that.
Yeah.
And then you would see the ones that were like, though they had to liquidate, they had to dip out, they left hanging or whatever it is. They struggled a lot more to get back up on their feet.
Right.
Nobody wanted to help you anymore, right?
Yeah.
But then there's other people that say, no, we weathered the storm. We just talked to our lenders. We figured it out. And like you've mentioned before, like on that deal that you said, like, okay, if this doesn't work, rather than the interest payments that we're getting originally, and we have to refinance this, all the rent payments go into the lender because it's, they need to get paid. We're essentially the X factor taking the risk here to do the deal.
If somebody
And we're
defaults
gonna
with
weather
us
it
and they
out.
communicate and work through it with us, we will give them another loan. If you go dark on us, like, and we have to, and you're not able to communicate, but you still get out of the deal, let's say, like, we won't give you a loan. So it's not really like sometimes there's uncontrollable things that happen, but it's like how you deal with it, where we determine whether like you're a
because nobody can know, man. Right? We can take a calculated risk, but you don't know what you don't know, and you can't control the uncontrollables.
Well, I
you
think
know?
that's a good place for us to end today with good integrity, honesty, and good morals. So it's been great having you guys on. It's a great discussion today. Yeah, I think there might be a part 2 coming after this. I mean, we're gonna see how this Davis Island deal and a couple other really exciting deals that you guys have going on.
We're gonna do something great in that one.
We're believers, man. So
We're believers.
it's great having you guys on. Thanks for joining us today.
A pleasure, man.
Sure.
Thanks for joining us for another episode of How to Make Money with Hard Money. You can catch this episode on Apple Podcast and YouTube. Follow us on all social media platforms.